Welcome to HDFC Securities 5-minute market wrap-up for the week ended 22nd March 2024. The cartoon refers to the SEBI's instructions to share results of liquidity and stress tests by small cap and mid cap mutual funds. In key macroeconomic news, US Federal Reserve kept rates unchanged at its Monetary Policy Committee meeting, and the Fed remains on track for 3 rate cuts in calendar year 2024. This prompted a strong risk-on rally in equity markets globally. At the same time, Bank of England kept rates unchanged, while the Swiss National Bank surprised markets with a rate cut of 25 basis points. India's composite PMI rose to 61.4 in March 2024. This was the highest figure since July 2023. In the euro area, consumer price inflation was confirmed at 2.6% year-on-year. This was the lowest rate in 3 months. It was aided by lower energy prices and stable food prices. China's unemployment rate unexpectedly rose to 5.3% on average in January and February of 2024, compared to 5.1% in December 23, pointing to continued weakness in the broader economic activity. Nifty was boosted by US Fed rates monetary policy, and it ended the week higher by 73 points, 0.33%. The broader market indices did well. The S&P BSE Small Cap Index rose 1.8% for the week. Despite the rise over the last 30 days, the Small Cap Index is down about 6.6%. Among sectoral losers, IT was the biggest, falling by 6.2% on muted guidance from Accenture. Among key sectoral gainers, Nifty Realty bounced back sharply and was up 5.3%, followed by Nifty Auto, which was up 4.2%. In select market movers during the week, shares of Shobha rallied by 18.5% on news that the company would develop a Rs 900 crore university campus in Dubai. Shares of Torrent Pharma were up 10.6% after the company acquired the Solapur Transmission SPV. Among select losers, shares of Infosys fell by almost 8% after Accenture, a key peer of Indian IT services companies, reduced its FY24 revenue guidance to 1 to 3% year-on-year on delayed decision-making and weak discretionary spends. Shares of Phoenix Mills fell by 6.8% after Rajendra Kalkar, who was president of malls at the company, decided to leave the company after almost 15 years. In FII Activity, FIIs were net sellers to the extent of 8,364 crores during the week. DIIs were strong net buyers with purchases of 17,351 crore rupees of shares, in part boosted by a bulk deal in TCS worth 9,000 crores. US markets were boosted by the Fed monetary policy and ended the week close to new 52-week high. In this section, we discuss select reports published by the research teams of HDFC Securities during the week. You can access these reports at our website. Our institutional equities team has a sell rating on Clean Science and Technology. The key thesis involves that the expected ramp up in HALS will be slower than expected as competitors in Europe increase capacities, as well as a significantly increased domestic competition in the MEHQ manufacturing. We have a target price of Rs 1037 per share. We retain a reduced rating on shares of HPCL. We believe that the current FY25 EV to EBITDA multiple of 7.7x means that the risk reward in the stock is unfavorable for investors. We estimate a PAT decline of 19% CAGR over FY24 to FY26. In Mahanagar Gas, we believe that the concern over changes in regulations is overdone. The Vahan data supports our investment thesis, suggesting a strong trend in new CNG vehicle registrations. We retain a buy rating with a target price of Rs 1,535 per share. Our retail research team came out with a note on Lumax Auto Technologies. The management expects that the 13 to 14% EBITDA margin is sustainable. We expect PAT to grow at a 36% CAGR over FY23 to FY26. That is all for this week. Do refer to the detailed disclaimer on your screens. The securities discussed in the presentation were for educational and information purposes only. Thank you.